are 103.9 billion in Q4 of a level of 17 trillion 703.7 billion in the third quarter. Current dollar GMP increased 6.4 or 271.6 billion. Gross domestic income. The gross domestic income, which means the value of production of goods and of services in the U.S., the costs incurred and the income earned in production increased 3.1% in Q4 compared with an increase of 5.2% in Q3. For a given quarter, the estimate for GMP and GDI may differ from for a variety of reasons, including the incorporation of largely independent source data. However, over large time spans, the estimate of GMP and GDI tend to follow similar patterns of change. In some revisions here, in GDP was the same as the estimate last month, primarily reflecting upward revisions in exports and personal income consumption PCE were mostly offset by downward revisions to private inventory investments, and we won't go into those. We read those. GMP 2014, real GMP increased 2.4% in 2014. This is from the 2013 level to the 2014 annual level, compared with an increase of 2.2% in 2013. So a better year. The increase in real GMP in 2014 reflects positive contributions from PCE, non-residential fixed investments, exports, state and local government spending, private inventory investment, and so forth. The acceleration of real GMP growth in 2014 primarily reflects an acceleration in non-residential fixed investments, a smaller decrease in federal spending, and acceleration in PCE, and in state and local government spending were partially offset by an acceleration in imports and deceleration in residential fixed investments. The price index for gross domestic purchases increased at 1.4% in 2014, compared with an increase of 1.3% in 2013. Current dollar GDP increased at 3.9%, or 650.8 billion in 2014, to a level of 17 trillion 418.9 billion, compared with an increase of 3.7%, or 604.9 billion in 2013. During 2014, that is the measure for the fourth quarter of, from the fourth quarter of, in other words, Q4 to Q4, the real GDP increased at 2.9%, compared with an increase of 3.1% during 2013. The price index for gross domestic purchases increased at 1.1% during 2014, compared with an increase of 0.3%. Corporate profits. Profits from current production. Corporate profits with inventory variation adjustment and capital consumption adjustments decreased by 30.4 billion in Q4, in contrast to 64.5 billion in Q3. Products of domestic profits, of domestic financial corporations decreased by 12.5 billion in Q4, in contrast to an increase of 16.1 billion in Q3. Profits of domestic non-financial corporations increased at 18.1 billion, compared with an increase of 32 billion in Q3. The rest of the world component of profits decreased by $36.1 billion in Q4, in contrast to an increase of $16.5 billion in Q3. The measure is calculates the difference between receipts from the rest of the world, the global economy in other words, and payments to the rest of the world. In the fourth quarter, receipts decreased by $36.5 billion and payments decreased by 0.4 billion. Taxes on corporate income decreased by $4.8 billion in the fourth quarter, compared with a decrease of $5.5 billion in Q3. Profits after tax decreased $25.8 billion in contrast to $70 billion in Q3. Dividend increased by $18.6 billion in Q4, in contrast to a decrease of $3.9 billion in the third quarter. On distributed profits decreased by $44.3 billion in contrast to an increase of $73.9 billion. That would have been in Q3. Net billion compared, let me get that right here. Okay. Cash flow with IVA, the latest, the internal funds available to corporations for inventories increased at $12.2 billion compared with $46.9 billion in Q4. The IVD and our adjustments that convert inventory withdrawals and depreciation of fixed assets reported on a tax return. Historic cost benefit to the current cost economic measures used in the national income and product accounts. The IVA increased by $27.5 billion in Q4, and it increased by $16.7 billion in Q3. For the year 2014, the profits for current production decreased by $17.1 billion, in contrast to an increase of $84.1 billion in 2013. Profits of domestic financial corporations decreased, and profits for domestic non-financial corporations increased. The rest of the world component of profits decreased by $9.9 billion in 2014, in contrast to an increase of $1.3 billion in 2013. For the year 2014, taxes on corporate income increased by $118.3 billion, compared with an increase of $19.5 billion in 2013. Profits after tax decreased by $135.4 billion, in contrast to an increase of $64.6 billion. Dividends decreased by $54.5 billion, in contrast to an increase of $102.5 billion. On distributed profits decreased by $8.9 billion, compared with a decrease of $37.9 billion. Corporate profits, according to the measurement of corporate profits before taxes with inventory valued adjustment, that is IVA. We get the definition here. Profits of domestic financial corporations decreased by $13 billion in Q4, and we contrast that with an increase of $16.2 billion in Q3. Profits of domestic non-financial corporations increased by $14.7 billion, in compare that with an increase of $31.1 billion in Q3. The fourth quarter increase in profits of non-financial corporations primarily reflects an increase in retail trade and other non-financial industries. In manufacturing, they were partially offset by a decrease in utilities, and of course that's petroleum, and in transportation and warehousing. For the year 2014, profits of domestic financial corporations decreased by $22.5 billion, compared with an increase of $44.6 billion in 2013. Profits of non-financial corporations increased by $212.4 billion in 2014, a good year there, compared with an increase of $66.2 billion, 0.2 billion, in 2013. The 2014 increase in profits of domestic non-financial corporations was widespread across all industries. The largest increase were in manufacturing and other non-financial industries and in utilities. Gross value added in non-financial domestic corporate business in the fourth quarter, real gross value added of non-financial corporations and profit units of real gross value were added were unchanged. So this is the latest report there. There'll be several other reports out. Let me go to Reuters here. Almost lost Reuters. This is an article here, the state of labor market in March, with consumer economists and investors in the weeks leading up to Easter, add to a seesaw debate when the Fed will raise rates. As Chair Yellen made it clear on Friday that the U.S. Central Bank is likely to start raising rates later this year, adding that continual improvement in the labor market would be an important factor in deciding when to move. Labor markets are therefore likely to be highlights of the economic week, providing further sign to the Fed on the health of the U.S. economy. Well, noted there, the Japanese economy moving further into deflation will affect this decision. Also, labor markets, the APD, that's the National Employment Record, which focuses only on the private sector, is due out Wednesday. We'll have that on our next week's report. Non-farm numbers on Friday. Economists poll, this is by Reuters, are forecasting a healthy rise of 244,000 in non-farm payroll jobs in March. If confirmed, it would be the 13th straight month of gains of over 200,000. Matching a run in 1994 to 95. That was good. In other words, 200 plus thousands in the 90s was good. However, we are coming out of, the U.S. economy is coming out of a depression. Thus, you need about 350,000 jobs to pick up the additional slack. Again, the problem here is that they're using normal conditions. Well, if I recall, 1994 to 95, you had the tech bubble coming in, so it was not as normal. I'll have to look that up. In post-war periods, only 3 runs of 14 months. And, well, I got to get it for me. 1976, 77, totally different era there. And it was 14 months there and 15 months in 1983 to 84. The situation was in the 80s and particularly in the 70s, the U.S. economy was not globalized. What is meant by that is much more dependent now on the world economy than before. Although a lot of the much of the activity, kind of use more economic terms, in the U.S. is the internal market, not to the extent, say, of a country such as Greece that is totally, basically, internal market, exception of looking at artifacts. Greece, their farm economy, internal economy there, they don't have very much manufacturing. Thus, it's totally there. The U.S. situation is different in that the economy itself overall is, a lot of it is internal. But when you start picking of things like the petroleum sector, which is a big sector now moving on of the economy, and specifically intellectual property if we include such things as Facebook